SEC Chairman Gary Gensler, as well as Microstrategy CEO Michael Saylor, have been adamant that there is Bitcoin and then there is crypto. After years of warning, now SEC enforcement has been on a tear. Why the enforcement against shitcoins and stablecoins? Well, it comes down to fundamentals. The Howey test and the right opportunity presenting itself for the SEC to make its move following Celsius, Luna, and FTX. Now let's check out the latest news surrounding the SEC crackdown, as well as the reasoning behind what makes Bitcoin different and what makes all of shitcoin land unregistered securities, straight from Saylor and Gensler themselves.
Risks associated with the crypto market, and I too support it. The first big crypto token, Bitcoin, was proposed 14 years ago this month on a cypherpunk mailing list. It was Halloween night, 2008, in the middle of the financial crisis, and Satoshi Nakamoto wrote about a new way to move value on the internet without a central intermediary. Nakamoto, we still don't know who she, he, or they were, didn't have faith in the financial sector overseen by folks like us sitting around this table.
Now here we go with this article from the 10th in bncrypto.com. SEC, NYDFS, and OCC gear up for battle with crypto, stablecoins, and exchanges, so we know shit is getting real out there. We also know the recent staking crackdown was big, with major ramifications for proof-of-stake protocols possibly, and again, this is why I find it tough not to see or question that something a little bigger is at play for Gensler. Here's what Gensler had to say about Kraken and staking. We'll go a little bit here with this clip of Gensler breaking it down to us like we're five.
There's a phrase online where they say, tell it to me like I'm five. So for those who are uninitiated into what happened here, tell it to me like I'm five. What was Kraken doing, and what was the problem that you were trying to solve?
Andrew, what Kraken was doing was asking the American public for their coins, crypto tokens, and saying, I'll give you a return, 4% to 21% returns. And the problem was they were not disclosing to the investing public the risk that the investing public was entering into. And we have a basic bargain in the United States since the 1930s. You can take whatever risk you want. Companies like Kraken can offer investment contracts and investment schemes, but they have to have full, fair, and truthful disclosure. And this.
So one way of looking at that there, it's one thing to hold Bitcoin in your own wallet. That's and Bitcoin in itself is viewed as property and commodity. But once you take that Bitcoin and say you put it on an exchange and you loan that out to gain yield or to get a return, now that has become a security. So these exchanges have been running this gambit for a long time, and eventually the chickens have come home to roost, it appears. Now it also appears the powers that be are also encircling the largest global exchange in Binance, who also eerily is resembling FTX in many ways. As we can see the headline, U.S. authorities close in, Binance expected to pay penalties for regulatory probes. And moving on. Now there's this one, and we covered that recently. Binance accused of moving $400 million from U.S. partner to CEO's trading firm in secret scheme. Kind of resembling FTX, Alameda, what was going on there. But the $400 million flowed from the Binance.US account at California-based Silvergate Bank to Merit Peak, a trading firm linked to CZ over the past 3 months of 2021, and that's according to records for the quarter, which were reviewed by Reuters. Now let's go take a look at what CEO of Swan, Corey Klippsten, said recently on Binance. And we're just going to do a teaser because we're going to break this down in depth tomorrow. But Corey, quick reminder that neither you nor Bitcoin need Binance. From a thread, Binance spreads the scams and disinformation all over the world with their shitcoin evangelism. Humanity will be much better off without Binance. Only $8 billion worth of Bitcoin on Binance, 2% of Bitcoin supply, and less than 1/3 of daily volume. Meaning, if Binance shits the bed, it's barely a drop in the bucket, its effects on Bitcoin and price. But also, it would be a massive shitcoin cleanse. We've talked about this on the show pretty extensively the past couple weeks. Now let's go check it out. Operation Choke Point 2.0, federal government's ploy to snuff crypto in full effect. I'm not totally against that, because crypto crypto's bullshit anyway, but for crypto firms, obtaining access to the banking system has always been a challenge. Why the aggression toward these exchanges, etc.? Well, based on the laws on the books, they're committing securities fraud. Now let's let Gigachad Michael Saylor break that down for you.
What are your thoughts about what's going on with Ripple and how he is handling the Ripple case?
Ripple's an unregistered security. It's pretty obvious. There's a company. The company owns a bunch of it. They sell it to the general public, but they never took the company public. There's no disclosures, right? So
now, do you see how that's fitting into what Gary said at the beginning of the show and what so many have said for years? And it'll continue to become more clear as the enforcement comes or until an act in Congress comes. But regardless, there's Bitcoin and there's everything else.
The SEC's position is you're selling an unregistered security. It's a crypto token, right? Just like Ethereum is an unregistered security. It's controlled by a few people in the Ethereum Foundation and Consensus.
Fair. Then here's a question.
Just like FTT, just like Solana.
Perfect. But here's a follow-up on that, Michael.
They're all unregistered securities.
Here's a follow-up on that. Right. I don't own a single Ripple, just so we know. So full disclaimer, I'm not a Ripple guy. But if both of them are unregistered, why target Ripple and not target Ethereum the way he is targeting Ripple? And by the way, this is coming from a guy that owns Ethereum, not Ripple.
Yeah, I think the best thing for the world would be if the SEC pretty much shut down all of it. It's all unethical, right? I mean, the Bitcoin position would be Bitcoin is an ethical commodity. All of these other altcoins are unregistered securities. They're all just equity tokens issued by a company in order to get around going public, and they're committing securities fraud.
Ethereum included.
Of course, especially Ethereum. You know, Ethereum's got $20 billion of ETH token locked up in the staking contract right now, and there's a couple of people that may or may not give it back to you ever. Now, isn't that the definition of investment contract? If a bank took $20 billion of your assets, froze the window and said you can't have your money back ever, maybe in the year 2024, we're not sure. We're just going to keep it. We may actually give you interest on it. We may take it all. We may slash it. That's the definition of a security, right? It's an investment of money in a common enterprise, relying upon the efforts of others and expectation of profit. The whole point is, if you want a crypto asset to be a commodity, you can't rely upon 4 engineers, a company, a CEO. If a person can make a decision, it's not a commodity.
So if your coin or token has a CEO, that's probably a security, and it's going to go through the fiat wood chipper, and Uncle Gary is going to go take it to the woodshed. We continue here. We can see the SEC targeting crypto firms operating as quote-unquote qualified custodians. So according to a February 14th report from Bloomberg citing people familiar with the matter, the securities regulator is working on a draft proposal that would make it difficult for crypto firms to hold digital assets on their clients' behalf as qualified custodians. This may in turn affect the many hedge funds, private equity firms, and pension funds that work alongside such crypto firms. Now again, why go after these exchanges? Well, that is a choke point. That is where most of these unregistered securities are dealt. And then again, let's let Gigachad Michael Saylor. Honestly, no one's broken all of this down. No one has better than Saylor and actually Gensler themselves on this argument of Bitcoin versus crypto, Bitcoin versus shitcoins, and commodity property versus a security and equity. Here we go.
The fourth innovation is digital platform, trading this stuff 24/7, 365, and cross-collateralizing it. Does the world want that? Yeah, I mean, they want to trade all sorts of derivatives, and they want to do sports betting, they want to trade digital commodities, they want to trade digital tokens. Is there and what's the example of success? Well, the big offshore crypto exchanges, big example of success, all the crypto tokens. But what's the regulator view? They want to be national securities exchanges. The SEC wants these things to be national securities exchanges and adopt the principles and the protocols of a national security exchange, which means you can't have 20-to-1 leverage. It means you got to have surveillance agreements. It means you got to be transparent. And so clearly, over the next 36 months, it's a 36-month, 40-month. I don't think it gets sorted out in 12 months. but it's over the next 3 to 5 years. This industry needs to go
by
from
the next halving, possibly?
entrepreneurial, fast and loose, to institutional, regulated, orderly, transparent, like, private companies to public companies, unregulated to regulated, retail offshore to institutional onshore. And, when you're looking at it as an investor, if you're a public investor, a public company, a public official, your safe harbor, your safe place is Bitcoin as property. Not Bitcoin as a medium of exchange, but Bitcoin as a store of value. I'm going to buy it, hold it for a decade. That's a clear place. If you're a tech VC, a crypto venture capitalist, I mean, who's going to dominate stablecoins? Who's going to dominate digital platforms? Who's going to dominate, what's the cool, DeFi swap exchange? You can play that, but you have to understand the competition, the regulation, the security issues, and it's a lot more complicated. And if you're a speculator, you're a speculator. Dogecoin versus Shibcoin, that's speculation.
Oh, bullshit. So the real question is, how is this regulation going to look? How is the attack? And how is the enforcement going to take place? We see this article from Cointelegraph. SEC proposes tougher rules as part of its crypto custody crackdown. So let's go through some of it. 5-member panel of the United States Securities Exchange Commission has voted 4-1 in favor of a proposal that will make it more difficult for cryptocurrency firms to serve as digital asset custodians in the future. Interesting. The proposal, which is set to be officially approved by the SEC, recommends amendments to the 2009 custody rule, and it will apply to custodians of all assets, including crypto, according to a February 15th statement from the SEC chairman, Gary Gensler. Gensler stated that currently some trading platforms that are offering custody services are not actually, quote, qualified custodians. According to the SEC, a qualified custodian is generally a federal or state chartered bank or savings association, trust company, a registered broker-dealer, a registered futures commission merchant, or a foreign financial institution. So do we have any of those in the US? What's going to happen to the various exchanges? Let's go ahead and start off with Gary Gensler here, and he's going to talk about Ethereum and proof of stake and how these shitcoin altcoins like Ethereum and XRP are securities. Toe and step with Michael Saylor.
Controversial statement that you made, obviously, was that Ethereum and Ripple
wasn't CryptoKitties.
that Ethereum and Ripple might end up being classed as securities. I mean, first of all, there's no reason why you wouldn't know, but do you have a sense of how long it might take the SEC to come to a ruling on stuff like this?
I don't know. I think that I think this is a multi-year process. The reason I say that is to write a rule, get public comments, to get feedback, finalize that rule, give a period of time for,
and again, this is from 2018.
Implementation, and maybe court challenge is 2 years at a minimum and possibly 3 to 5 years when you really see how things go. I think 2018, and I'll be speaking more about exchanges later this week, but 2018 is a period of time to try to bring compliance into this sort of 1,000+ tokens. On Ripple and Ether, while I think there's a strong case particularly for Ripple or XRP, given the centrality and the common enterprise around Ripple Labs, and that they're selling it every month and so forth, that's really a discussion between them and the SEC. And ultimately, the way I would think is, if the SEC declares that they're securities, it might end up in court. And so it won't be the SEC, it'll be maybe not even a federal district court, but an appellate court that will decide, or the Supremes. But let me say this, if they decide that they're not securities, I think that too probably ends up in court. And the reason is because somebody else will say, well, why are they getting out of regulation and I'm not? So law is best when applied consistently, and we went through the Duck test and the Howey test, a little humorous, but it's also because for whichever way authorities go, they have to have an eye on consistency as well.
Right.
And so I think...
and that's where some people are pretty upset about Gary Gensler and the spot Bitcoin ETF. That's a topic for another day, but also we can see some hypocrisy in his statement there from 2018, and then the futures versus the spot ETFs and the reasoning behind it. But let's continue here when we get into this. Now, one of our favorite Bitcoin-only companies, Swan Bitcoin. So we're wondering about this. How's this going to affect them? And Corey broke this down pretty well. So Corey said the best way to buy Bitcoin is to send your money to a broker and have them send your coin straight to you, like Bull Bitcoin does. The second best way is to segregate duties between custodians and broker like Swan, so the broker cannot touch your coins. The worst model is trust me bro, like Celsius and Binance, where the exchange is your sole custodian. Now here, some people had some good questions and Corey answered those well. So this guy said, what are your thoughts on River? I think companies like River will either need to become qualified custodians themselves, meaning start their own separate trust company like Coinbase and Gemini have done, or partner with the trust company like Swan does. Squirming not to say Unchained Cap, I see. And Corey said, man, I love Unchained, investor, former advisor, friend of the founders, and big fan. Why can't Swan do what Bull does? We can add it in the long run. Our mission is to create as many Bitcoiners as possible, so starting with the service that allows for third-party custody has much wider reach. And it's so funny, all these other security dealers and things, while those who have been focused on Bitcoin only aren't going through this same tragedy with regulators because Bitcoin is property. And now kind of further hitting on what Corey was talking about, we can see Coinbase, Anchorage Digital say that they'd be okay under the SEC custody proposal, but risks may lurk for others. Let's check it out. After today's SEC proposed rulemaking, we're confident that Coinbase Custody will remain a qualified custodian, said Paul Gruhl, Coinbase's chief legal officer, in a statement to CoinDesk. Coinbase's trust is chartered by New York and it maintains custody for a significant swath of crypto investors' assets in the U.S. The company advertises on its website that customers can store their assets in, quote, segregated cold storage with a qualified custodian. Similarly, crypto bank Anchorage Digital was quick to assure crypto investors of its unique role in the industry as the holder of a federal charter from the Office of Comptroller of the Currency. So you could say things are getting pretty serious. Let's get this here from Bitcoin Gandalf, October 3rd, 2022. Gary Gensler, that's quite a change of tone. Gensler is speaking clearly. The majority of shitcoins are unregistered securities.
Chair Gensler, we had Chairman Rostin Benham from the CFTC on with us last week, and he made the point that
the
CFTC should be regulating all of these things. When you start to build up, I guess, some case law, some examples of people who have agreed to settle with you like this, does that make the case more firm that the SEC would then be the place where these are all regulated?
Look, our agency is an agency that oversees this basic bargain. When a group of entrepreneurs is raising money from the public and the public's anticipating a profit, they need disclosure, full, fair, and truthful disclosure. And that's the core bargain in our capital markets. You get to take the risk, but the person raising money or the persons raising money has to disclose various information to you.
And that's another thing. Chair Gensler has been very clear about this for some time. You need to come register as a security. But then their whole house of cards could come down and they couldn't continue their Ponzi schemes, their rehypothecation schemes, and keep fleecing people. But this is kind of all we're left with is SEC enforcement because, quote, crypto regulations impossible without an act of Congress. This was from the Blockchain Association. Let's see what they said. The fallout from these collapses have prompted concern regulatory agencies, including the SEC and the CFTC, to step up their attempts to regulate the industry and enforce their policies to the best of their ability. However, these regulators are bound by the legal reality of not having the authority to comprehensively regulate, quote-unquote, crypto. From the Blockchain Association executive, quote, neither can obtain it through an amount of enforcement and neither will ever have it without an act of Congress. Now, I'm going to make a metaphor here. If we look from basically immigration law hasn't changed since the 90s. And then while many campaigned on immigration reform, they were going to fix everything. Eventually in the 2010s, Safe Communities was implemented and put into place, and a record amount of migrants were deported out of the U.S. Now, why did they do that? It may have been to draw an example to the issues through enforcement, because they can't write laws. All they can do is enforce it. And if they enforce it and they stir up enough commotion and enough people take issue with it and stand up and and show the importance of the issue, then you hope Congress then acts. Now we're 30 years later and not much there on the immigration front. This is one way to make that comparison through a metaphor. So today, issue and attention is being drawn to no enforcement, which is what was happening before this big-time crackdown coming from all angles. And just as immigration, this administrative agency swivel continues as Congress deals in gridlock. I'm not stating support for any of it, but rather trying to draw a comparison between government enforcement of laws on the books while Congress does nothing to alter either through repeal of old laws or through the creation of new legislation. Without that, the status quo remains unless, of course, states start instituting sovereignty in a fashion through nullification and different means that they see fit under the 10th Amendment. And we've also seen that with Wyoming and Florida and Texas and Mississippi. These others making sure that they front run anything from the federal government. Now let's continue. We got one or two more here. And just to build on what we were saying about the gridlock on certain issues creates like inaction when it comes to the state, especially when you have a divided government like we have. Here we go. Crypto crash. Senate hearing shows political party divide on how to regulate this sector. We know the Karens, the statist Karens like Elizabeth Warren want to shut everything down so the banks can continue their monopoly, and the Federal Reserve that she seems so against yet seems to go to bat for so often. And there's others like Warren Davidson who have implemented the Keep Your Keys Act and things of that nature, but what some would say is the minimal enforcement got us here. Now, whether the things we've seen with Gensler, SBF, FTX, whether that was orchestrated or not, is a completely different rabbit hole, but whether honest act, false flag, or opportunity presenting itself, while Congress has not acted, the SEC has applied the Howey test as they have threatened to for years. And they have done so with the intent to maximize their impact through precedent or through exchanges to target the most securities. Check out this conversation me and Nico had on this topic recently.
I know if you're a Bitcoiner, you're celebrating, but I would ask you to be wary. I would ask you to be wary. These types of moves are not just going to affect certain things. And again, Gary Gensler or the Biden administration, they're not incentivized. They want to keep that power. They want to keep that privilege of being able to issue money for free that everyone else has to work for. So again, like you could celebrate, but at the same time, like be cautious. And that's how I'm feeling right now. I'm feeling cautious about this. If you're a Bitcoiner, this doesn't affect you though. You know, anyways, what's your take, Rustin? We'll move on to the culture.
Yo, Fiat Smack said it good down there. Interesting was the fact that Gary was promoting self-custody, right? Now, isn't it much easier to regulate and keep track of everything when you're just purchasing and then taking self-custody of your whatever shitcoinery or whatever it may be? Now, it should be Bitcoin, but is he pushing people in that direction because then it's less of a regulatory burden in the future? I don't know. Or is he pushing people to understand what a truly decentralized protocol is? Possibly. Another thing, Mr. Robot was right. Armstrong is a cuck. And I had another thought is, what if it's a test to see what protocols can actually stand up to certain pressure points like this and to verify that Bitcoin is what it is? Before the United States were to truly adopt it. I don't know, getting hypothetical here.
Okay. So you're taking a more optimistic approach. Okay. You're a Gensler fan, I take it.
Not a fan, but I'm just trying to look at and think of all the possibilities that could be there, right? Like praxeology, what are all the possible outcomes? And then we trickle down into what is the outcome. And F.A. Hayek, he talked about this future where you would have competing monies. Well, all the rest are showing themselves that they can't because they can be controlled, silenced, stopped, mitigated by the state. And so this one true protocol is starting to rise to the top to be that one true money that originated from the market. And we're seeing that. And all these new developments with Bitcoin, don't know where to go with that yet, personally. But I just see Austrian economics playing out. We're seeing game theory play out, and we're seeing that honey badgerness of the Bitcoin coming out, and all this shit that happens, and all these people throwing their hands up. Well, if you're a Bitcoiner, you've already got your Bitcoin in cold storage, self-custody. You sleep well at night, Well, these guys are. I don't. Can you unstake your Ethereum? Like, I don't know how the hell this works. We are in uncharted territory.
We are in uncharted territory.
Did Ethereum kill itself? I think they did.
They might have. They might have, dude.
Now, as we know, it's not the individual shitcoins. It's not just the exchanges. Now it's also stablecoins going on the chopping block as first mover America's Paxos acts on SEC threat. Stablecoin issuer Paxos will stop minting new Binance USD BUSD tokens following the threat of legal action from the U.S. Securities and Exchange Commission. The WSJ reported on Sunday that the SEC intended to sue Paxos for selling BUSD as an unregistered security. But wait, there's more. Binance CEO says declaring BUSD a security will profoundly impact crypto progress. And more on the minting of BUSD coming to a close. And of course, every action has a reaction. This may be one. How useful this will be, who knows? Because we saw algorithmic stablecoins, Terra Luna, and how that ended. That was a dumpster fire. But it's becoming clear whether it ends up being a stablecoin or a CBDC, there will likely be one digital dollar, and it will be sanctioned by the state, of course. Maybe that's just me. But Binance CEO says more non-USD stablecoins may emerge. Maybe the Russia gold stablecoin? I'm not sure, but that's in the works. Also, different blowback within the industry. Of course, the Tether truthers are out there, but as a response to all this, the Tether market cap nears $70 billion as SEC crackdown hurts stablecoin rivals. And more in the news related to a digital dollar. It appears Lyle Brainerd to take over economic advisor role. President Joe Biden has elected as top economic advisor by naming digital dollar advocate and Fed Vice Chair Lyle Brainerd for the role. The official announcement was February 14th. According to Bloomberg, the move is significant for the industry because Brainerd is a proponent of a U.S. digital dollar, central bank digital currency. How does that make it good for the industry? That makes it bad for everyone. That is behavioral economic slavery. Furthermore, Brainerd will replace outgoing NEC Director Brian D. The move will place her alongside the not-so-crypto-friendly former Fed official, Treasury Secretary Janet Yellen, the Penguin herself. Now again, some people still may not get it, so we gotta beat it into their brains like ol' rug pal. And a lot of the issue I see going on is the difference between what people want to be so and what is. Yes, I would like there to be no regulation and an anarcho-capitalist free market monetary Darwinism to go into effect, and Bitcoin comes out on top anyway because of its fundamentals. But the fact is, in the 1930s, the Howey test was implemented, and there are securities laws, and you have to abide by those things unless that law is repealed or new laws are put into place. And if not, you have to abide by those. Hey, Bitcoin had a fair, equitable, just, free, and open offering to anyone in the world as soon as it came to be. There wasn't VC money being raised. There wasn't a pre-mine. There wasn't all this other shit. There wasn't a CEO. But as we said before, maybe with all this, Gensler is pushing everyone to be more fundamental Bitcoiners than he is to be a crypto degen. He's telling you not your keys, not your coins. He's saying Bitcoin is the only commodity out of all of this. All of these things are unregistered securities. Sounds kind of based at the end of the day in a way. But here we go. Gigachad.
To the Senate yesterday, I quote, "If it stays outside of the public policy framework for AML, tax compliance, and investor protection, it is not going to long persist," unquote. I think that's pretty clear what he's trying to tell you.
The issue I've got with all of this is I get the AML, I get the tax stuff. It's this stupid securities law from 1933, 1934 that doesn't make sense. It makes it highly restrictive in who is able to access.
Now, does it not make sense, or does Raoul Paul want it not to make sense? Though it does, as we've heard Gigachad and Gensler break it down to us on how these things pass the Howey test, etc.
Certain things. It's that what is a security is we're trying to fit something into a wrong framework.
Yeah, Raoul, I mean, that's what the crypto guys
Because anybody can buy a house. If you say it's a property, everybody should be able to buy it.
That's what the
yeah, but Raoul, if I created my own Mikey coin and then I pumped it on Twitter and I dumped it on the retail population after I gave a bunch to a celebrity who then told the world it was great, It's illegal and it's unethical. The truth of the matter is, if you have a centralized group of people creating a token, which is a security, giving it to themselves, and then selling it on the market and representing it as a decentralized property, you're crossing an ethical line and you're also crossing a legal line, and you can't avoid the ethical responsibility and the legal responsibility simply by saying, oh, it's new tech.
Nobody's saying that. What I'm saying is to classify it as a security is not the right way of stopping that. It doesn't stop it in equity markets. It doesn't stop it in the VC markets. It doesn't stop it at all. What it is it makes it more restrictive for people. Now, that nefarious behavior needs to be regulated.
If you understand securities law, you understand that they are securities. If I actually create 10 million tokens and I give 5 million to me and my four compatriots, and then we start marketing the rest, and we do it without a registration statement, without disclosing who owns the security, it is a security. You are violating securities law. The law is black and white. And so the only people that think it's not a security are people that don't know the law, right? If you look at everybody in the crypto space outside of Bitcoin, I think that most of them have never taken a company public. They don't have general counsels. Right? They don't understand.
That was some classic Saylor, and if you would like to learn more about the SEC crackdown and what it means for shitcoins, or if Ethereum killed itself, check out this video. Man, it's wild, but I can't help but feel secure in holding my own property in Bitcoin and cold storage. If you haven't figured it out yet, well, I guess it's better late than never, but don't shitcoin. It's bad for you. Saylor and Gensler been telling you, Bitcoin only, and you don't want to get the shit slapped out of you by Gary Gensler. Until next time. Peace.